Hey everyone, this is Robert Keens with goldsilverpros.com. It is Tuesday, December 15th, 2020. We talked about silver in great length last night, did a retrospective on 2020, added some new information for you guys. That was heavy research report. So today is going to be both about gold only and also shorter than what we did last night because we did heavy research. I'm going to take a look forward to what I think is going to happen to the precious metals, specifically gold in 2021. And I'm going to show you the latest commitment of traders data for gold leading up to December 8th, which I think you guys will find particularly interesting as it relates to who is shorting the gold price. Right now, we're up $26.18 on gold, up to $18.53. That was a nice day for gold. We're up 2.81% in silver, 67 cents, 24.52. 24.50 is a key resistance and support line. So it's going to take another good day tomorrow and the rest of the week to punch and stay above 24.50. But it's nice to see some bullish momentum in silver as we get into the middle of the month and in gold as well. Let's get over to the gold sharp chart here. Over the last 3 or 4 months, I guess since August, we've had a downward trend in gold. However, this is a bullish signal. I went over this last time I covered gold on the channel. Here is a preceding big move upwards and then a long, slow declining, about a 45-degree angle range trade. Consolidation phase in gold, which means we're probably about to hit the next bull leg of the cycle. We'll probably hit it either as we end up December or more likely January, because I think psychologically people are going to be exuberant about the markets for the holiday season. Are going to spend as much money probably as they have all year on Christmas gifts and on parties and things, spending time with family. So you could see gold kind of drift a little bit the rest of this month. But I think starting in January, we're going to turn our eyes to the new year. The monetary bazookas are going to come out, and I'm going to show you where they've already come out and where they're about to double down on that. And I think also we're going to have a change, it looks like, in the political administration, and this administration wants to spend even more money. So I think that bodes well for gold in 2021. Getting over to commitment of traders data, this goes through December 8, 2020. As you can see here, I'm on the gold section of the long form of a COT report on the CFTC.gov website. Wanted to show you as we go across here the percentage change leading from December 1st to December 1st to December 8th. The swap dealers here in this section added 3,068 short contracts and subtracted 2,400 long for a net of about 5,500 net short in 1 week. They're now up to 48.9%, as you can see right here in the middle. 48.9% short are the swap dealers. They're the ones shorting the gold. And that explains a lot of the sideways movement in gold. Of course, it's not just this week they've been shorting it. It's just that they're doubling down on it. We're going to show you how that has been the trend since 2000 here in a moment. Also wanted to point out the managed money, the financial types, who normally don't take physical possession of gold, can, but don't normally historically, have added 13,398 longs from December 1 to December 8th. They are extremely bullish on gold because the financial types are looking at the economic statistics. They're looking at the change of administration. They look at the likely coming onslaught of government spending, and they look at all of the problems that have been kicked down the road coming, probably starting fruition in 2021, just like I am. So they're going long on the price of gold while the swap dealers are going short. Bullion banks going short, no surprise, is that's what they've been doing pretty much since 2000. So if we go back, we're going to actually graph this back to 2017. This is the concentration of the 4 and 8 largest traders short in the precious metals. Actually, that is the long chart. We're going to go to the short. Sorry, guys, I clicked on the wrong one. Okay. Concentration of 4 and 8 largest traders short. The green is the largest 8, and the red, of course, is the largest 4. We have seen an increase in this year dating back to basically the shutdowns and the crash. This has started to trend back up, meaning more shorts since we had the shutdowns back in March. Of course, we had massive shorting leading up to 2020, which I think I documented on this channel as well and wrote about on my blog. Massive short positions, top 4 and 8 leading up to 2020. Then it fell down with the exuberance of the first few months of the year, and then it started to go back up, of course, because of the pandemic and the shutdowns. That's basically price management, in my opinion, or position management. The more short you go, the more you can pull the price down. I think that explains some of the drag on gold that we've had the last couple of months. But in any case, this shows you it's the bullion banks that really control the shorts on the market. So it doesn't surprise me to see them going net 5,500 short between December 1st and December 8th. And of course, on the other side, taking all of that long is the managed money, the financial types. They're betting going long because they're seeing the economic numbers. We'll see who wins, but interesting data on the COT report. Okay, first, monetary bazooka. Look, since the start of 2020, how much money stock, M1 money stock, that's liquid cash, in billions of dollars. So this is going to be trillions on the chart because it's in the 6,000s, has been created since 2020. So we got up to 3982 for history up until February 2020. And then from February to now, we've gotten up to, let's get this top number, 6542. So that's increased probably about 85%. I'm just doing the numbers in my head. What is this? 3982, almost 4,000. Then you got up to 6542. That's 2,500 over 4,000. Round it down, that's 5 over 8. So about 55% increase in 1 year. That's a monetary bazooka resulting from the shutdowns. Starting in February. Here's the inflection point, February. When we started to worry about the shutdowns, but before we actually really started to shut down the US, they started printing in anticipation, and it's been going all year. That's free money floating in the system, M1 money stock. And what that consists of is currency outside the US Treasury, Federal Reserve banks, and the vaults of depository institutions, travelers' checks, demand deposits, and other checkable deposits, so on and so forth. That is the most liquid of the money stocks of the M1, M2, M3 that we commonly look at. That, ladies and gentlemen, is a monetary bazooka. That, ladies and gentlemen, has not hit the gold market just yet. Because if you take, a 55% increase, 60% increase in the money stock, and you look out over the last year, let's do the last 1 year chart on gold. Gold hasn't risen that much this year. It did rise a lot, but it's fallen. So gold is not reflecting all of the new money created. The price is not reflecting all the new money created this year. Gold still has a long way to run, and that's the given money stock that's printed and out there that's liquid. Well, there's another monetary bazooka that's coming in 2021, but that's not coming from the Fed. No, ladies and gentlemen, that's coming from the Treasury. Because here we see at the same time the Fed is printing to abandon, we see the Treasury deposits of Federal Reserve banks. So when the Treasury sells treasuries, they take the money in and they deposit it at the Fed. It went at the beginning of this year, $423 billion to now sitting at 1.5, we'll highlight right here, $1.574 trillion, almost a fourfold increase in 1 year. Okay, look at where we were. The Treasury deposits were almost nil leading up to the financial crisis of 2008, 2009. Then they got to this year and they went up to about 376 billion. Okay, that's a modest increase, but it happens over 12 years. And then it's almost a fourfold increase of cash sitting in the Fed banks that the Treasury is going to spend this year. How do I know they're going to spend it? Because if you look at the report from the Treasury, and I'm not going to show it here because it's very, very long. But I was going through the Treasury report. They spend that money. They liquidate that money as the year goes along, and then they, build up their deposits again. It's like a little pendulum. They're going to spend this money next year, and they're going to have to because the shutdowns are having a really negative effect. They're going to have to pay for all sorts of stuff. That is a monetary bazooka. So if you thought we had a monetary bazooka in 2020, we did, the increase in the M1 money stock. But boy, we got another monetary bazooka coming as soon as 2021, the calendar ticks January 1st. They're going to start unleashing that monetary bazooka to pay for all the stuff that we need to pay for. That's bullish on gold. So what's going to happen? The bullion banks with all the shorts, they're going to have to cover somehow because I think people are going to continue to stand for delivery. Many ways that they can cover. But I think if you're interested in gold, I think these monetary bazookas are very, very bullish if you're interested in gold. And I think there's more coming. I think with the change of the political class, at least in the White House, and potentially winning some seats as well in the Senate, we'll see. they're going to vote more Green New Deal, socialist type programs, because that's what they've been promising. I'm not taking sides in the political debate. That's what they have said publicly. They're going to do this. I think they're also going to bail out the states, which start to go bankrupt. Are they going to bail out the pensions? I don't know. They're going to try to bail a lot of people out. The monetary bazooka is going to continue to get more and more and more. And we're in the hockey stick phase of that monetary bazooka. That is ultra bullish for gold and silver. But first for gold, it will pop gold first. And it's coming as early as January 1, 2021. The money you saw on the Treasury's balance sheet, money held at the Fed, is going to start getting liquidated. What did they save it up for? They saved it up for now, because you have businesses being ruined. Last night, I quoted 110,000 restaurant businesses permanently closed. You have higher unemployment. On Twitter today, I was posting the Bureau of Labor Statistics labor force participation rate, which is not looking good. More people unemployed. How do you pay for all that? With the monetary bazookas. It's coming. Bullish for gold. I think 2021 is going to start getting really bullish for gold. And I have a very special guest for you guys next week. About this time next week, we're going to do an interview with somebody near and dear to our hearts. It's been on our channel before. That's going to do a preview of 2021. Stay tuned for that. Very, very special guest. A lot of experience in these markets, has been a broker and has worked in the financial markets and has financial industry experience. Stay tuned to that. Well, that is going to do it for tonight, ladies and gentlemen. I'm going to take the rest of the night off and prepare research for our very next video this week, which I think you're really going to enjoy. It's going to be another bullish one on gold and silver. Till next time, this is Rob Keens with goldsilverpros.com.
Here at Glint, we're making money fairer. How? By using gold. Glint lets you store, exchange, send, and spend multiple currencies, including gold, through a simple iPhone or Android app. Register for your Glint account today by downloading the app from your favorite app store.